Hello everybody and welcome to my monthly Vietnam update. October was another horrible month. A Vietnamese property tycoon was arrested after an alleged multi-million in US dollar fraud, and the State Bank of Vietnam raised key rates by another 100 basis points. This news rattled markets, and the Vietnam index declined sharply in October by minus 13.4% in US dollar terms. Also, the Vietnamese dong lost 4.1% against the US dollar in October, which of course had an additional negative impact on the NAV of our AFC Vietnam Fund, which closed the month 10.7% lower according to internal estimates. Hi, my name is Andreas Vogelsanger. I'm the CEO of the AFC Vietnam Fund. Don't forget to subscribe to our YouTube channel and switch on the bell so you don't miss any uploads. Until the beginning of April this year, the Vietnam index outperformed most markets and was even slightly up, despite the outbreak of the Ukraine conflict. But after that, the tide started to turn and the Vietnamese stock market also declined, despite solid macroeconomic numbers and strong 2022 earnings growth forecasts for Vietnamese equities of over 20%. The reasons for the sharp corrections are mostly homegrown issues, such as corruption investigations and arrests related to real estate and stock markets. The two interest rate hikes of 100 basis points each, with the latest raise only 1 week ago by the State Bank of Vietnam, was one of the main reasons for the VND, so the Vietnamese dong, weakness recently. Corruption investigations and arrests, two interest rate hikes of 100 basis points each, plus concerns about increased geopolitical tensions created a lot of fear among domestic retail investors, who are still the dominant force on the stock market. The fear or uncertainty has eventually driven Vietnam's equity market valuation to a decade-low level, with a forward 2023 PE of 8.3 times, the lowest we have seen since 2012 for the Vietnam index. Interesting enough, when we launched the AFC Vietnam Fund back in 2013, in December 2013, the valuations were similar to today's valuation, with a P ratio of around 7.5 times, a price book ratio of around 1.2 times, and a dividend yield of around 5.6 times. Also in March 2020, when the WHO declared the COVID-19 outbreak as a pandemic, global investors became very nervous about the economic outlook. What followed was a sharp sell-off across global stock markets, especially in Vietnam, where we saw very attractive valuations, but only for a very short time, until the market started to recover strongly and rallied over 68% in the 12 months following the outbreak. We also saw a very similar pattern during the global financial crisis back in October 2008. Where the Vietnam index rallied over 53% over the next 12 months. These would have been a perfect opportunity for new investors to finally gain exposure to Vietnam, or for existing investors to take advantage of these very attractive valuations in order to increase their existing exposure. But we are fully aware that this is always easy to say with hindsight. I want to talk a little bit about the relationship between the stock market and the economy. So far this year, there are compelling macroeconomic numbers for Vietnam, such as, for example, the 2022 GDP4 growth forecast of around 8%. Vietnam is projected to become the fastest growing economy in Asia this year, amid a regional downturn led overwhelmingly by China's sharp economic deceleration, according to the World Bank. In its latest report, which was published at the end of September 2022, the World Bank estimates that besides Vietnam in Southeast Asia, only the Philippines with 6.5%, Malaysia with 6.4%, and Indonesia with 5.1% are forecasted to exceed 5% this year. But what we also see this year is a weak Vietnamese stock market, bringing down valuations to a very appealing level. Andre Kostolany, a Hungarian-born economist and stock picker who became quite famous for beating the stock market, making huge profits during the Great Depression and later during Europe's post-World War II reconstruction period. He once said the relationship between the stock market and the economy is like a man, representing the economy, walking his dog, representing the stock market. The dog follows his master and either runs ahead or behind of him. They eventually always meet, but the only problem is we don't know how long the leash is. We do of course not know how long it will take for the market to recover to a new all-time highs, but we do think for long-term investors it makes a lot of sense to gain or increase exposure to Vietnam now. This is also why the management team of the AFC Vietnam Fund, Vicente Nguyen, our CIO of Vietnam, Thomas Hooker, which is the COO of the AFC Vietnam Fund, and myself, which I'm the CEO as you know, decided to take advantage of this, in our view, oversold situation, and we all increased our personal holdings of the AFC Vietnam Fund this month. On the 17th of October this year, the State Bank of Vietnam, SBV, decided to increase the foreign exchange rate trading band from 3% to 5% to give commercial banks the flexibility to devalue the Vietnamese dong. And only around 1 week later, the SBV decided to raise key rates by another 100 basis points in order to stabilize the currency. But the Vietnamese dong nevertheless weakened by around 4.1% against the US dollar in October alone. These two decisions didn't contribute positively to the already nervous and worried mood of local retail investors. But it looks like the SBV had no choice to let the Vietnamese dong weaken against the US dollar in line with other regional currencies. In last month's report, we wrote about how little the VND, the Vietnamese dong, lost against the US dollar in comparison to other currencies. We also heard that the SBV was previously intervening quite aggressively to support the Vietnamese dong, and hence market estimates that Vietnam's foreign reserves declined by about 20 billion US dollar from 110 billion to currently around 90 billion. We were asking ourselves why Vietnam was defending its currency so aggressively and not letting it weaken against the US dollar in line with most other currencies. A weaker Vietnamese dong would of course also keep Vietnam's competitiveness in the export market attractive, given that its products would remain inexpensive, but it looks like the SBV has now changed its strategy and they started to gradually depreciate the Vietnamese dong versus the US dollar, and as of the end of October, the Vietnamese dong depreciated around 8.8% against the US dollar year to date, in comparison to the Indonesian rupiah, which declined around 9.3%, the Philippine peso, which declined by 13.7%, and the Thai baht, which declined by 14.5% over the same period. So let me talk about the latest arrest. Mrs. Chong Mai Lan, the chairwoman of Van Thinh Pat Holdings, or short VTB, is one of Vietnam's largest real estate developers. She was arrested on suspicions of financial fraud as the country intensifies its long anti-corruption drive. She was accused of illegally issuing corporate bonds to raise trillions of dongs, or tens of millions of US dollars, from investors between 2018 and 2019. Some of these corporate bonds were apparently sold to retail investors at attractive terms, and this is against the State Bank of Vietnam's guidelines. But the Ministry of Public Security of Vietnam announced that further investigations are underway to clarify the frauds. It is most likely that VTB Group will have to pay back retail investors holding their bonds, but given the group's significant assets, this won't create a problem for them, we think. Even though these recent corruptions and fraud investigations, with a series of high-profile corporate arrests during including top stockbrokers, property developers, and even the regulators, are hurtful for the financial market in the short run. But we believe they are also very important for the future economic development of the country. So this is all from me. Thank you for listening, and you're going to hear from me again next month with the November update, and hopefully with a little bit better news than this time. Thank you and goodbye.